what day it is? Guess what day it is? It's Hump Day, ladies and gentlemen. Welcome to the Hump Day edition of the Daily Market Commentary. Hope you guys all had a phenomenal Monday and an even better Tuesday as we are doing what we do each and every day, looking at our markets and identifying where are our opportunities in our big picture markets as well as our stock of the day. Now, our Monday stock of the day, well, we took that one on the chin. And that's because the markets decided to rally higher and we were looking at a potentially bearish setup. So we're going to change things up a bit today and we're going to go with the trend. And we found a decent bearish stock that could be set for a pretty cool breakout. So stay tuned to the end of the video to watch that. But if you've got a stock of the day you want me to talk about, put it in the comment section down below and hopefully we can get to that in our next video. So without further ado, let's start talking about the big picture. So in the big picture, looking at our markets, we're back to a new all-time high. Starting with the S&P, we talked about on Monday getting long above this line here, this 40.33, and taking the breakout trade. And the breakout trade was there. There was a fair amount of basing, so we did get a little bit of basing in that time. And if you were able to jump on that, you got a really nice, clean move away. Hopefully you were able to catch that, run it for a few points. It started to stall there towards the end of the day, which I'm okay with. I'm okay with the stall. Now, why am I okay with the stall? I like the stall because the stall now is setting me up for another potential move higher on this pattern. All right, we have this ascending triangle pattern here at the very top of an all-time high. And I've said this a number of times. I'd rather buy an all-time high than sell it. That's for sure. Because, you don't tug on Superman's cape, you don't spit into the wind, and you don't short the all-time high. Those three things just can't happen. And so when I'm looking at this, I would look to see, is there going to be a potential bit of basing with a breakout above this line? Now, if we don't get the breakout and price starts to come back, there is a pretty clean 15-minute demand area down here, right, where we have the origin of this move up, which was our breakout trade from the other day. We have a couple of other levels to pay attention to as well, but that I think would be the best too. Next, Nasdaq. So the Nasdaq also gave us a breakout trade. So if you took the breakout trade on the Nasdaq, you got a pretty nice run away from there. If you didn't take the Nasdaq breakout trade, price actually rallied up into our 15-minute supply and have started to sell off of that a little bit. So I'm going to remove this supply level. Now, the Nasdaq is not at an all-time high as of yet, but we got above this pivot. And by getting above this pivot, we removed the barrier to get to a new all-time high. And so as the markets are continuing to march a bit higher, yesterday there was a little bit of a reversal day. So I wouldn't be overly surprised to see a little pullback in here. And so I'm still interested in a long, but if we get basing right below here, you might actually get a little short day trade short opportunity. And then the one that I am actually paying attention to, we got this little wick over wick level here on a 15-minute chart, which is set as a confirmation entry. We also have a little level here on the hourly that I think is actually probably a bit cleaner. And so I'm going to remove this one and let me go a little higher. And it's this wick over wick right here, which is fairly close to the pivot. Now, our stop would have to be below here anyway, so we could certainly have left both levels on. The more aggressive entry is to take this 13,431 by 13,412, as that would be our target on a short and our reversal back up. Certainly, you can take a long on a breakout above the high, provided that we get basing. But the S&P might be the better choice for that one at the moment. Now, crude oil. We talked about the fact that there wasn't really anything to do, and there wasn't really much of anything to do. We're still inside of this range, and so I'm not going to add anything to the trades. I don't force trades. It's just not a good thing to do. I don't like doing it, and I'm not going to do it today. Now, if those of you that are in the iron condor position, you are still sitting pretty in your iron condor trade. And if you don't know what options are, go to tradersarmy.com, learn a little bit about options, and then you can figure out how do I utilize a market that's kind of chopping around in a range. But there's really not a lot to talk about today in crude oil. Now, gold did break above our breakout line. Now, the downside of breaking above our breakout line here is that I didn't get the basing immediately before the level. So it didn't give me a clean entry. If, however, you took this retest, then congratulations, because that's what happens if you don't get basing before the level. You'll typically get a pop above and then a retest back to the origin of the move that gave you the pop above. And that's exactly what happened here for a nice move away. So I'm sure some of you were able to catch that. Now, what am I looking at for today in gold? Well, if I look at the 4-hour chart, my 4-hour trend, we have started a new uptrend once we put in higher high, higher low, and we're still below this pivot here, this little area of control. On the daily chart, we can see that it's building a pretty nice base. And usually when we're building a base of this caliber, you get a decent run. Now, I may not have as big of a run as I did, last year in the summer. But if you look last year in the summer, we got a huge run in gold, right? Gold built a really strong base and went from 1748 to 2098. Do I think that's going to happen again? Not necessarily, but I do think that we can see a move higher in gold coming soon, and so I'm not going to take it unless I get some sort of a breakout trade to give me that basing. But on the hourly chart, as we're dropping a little bit this morning, none of these are quality levels of demand. When I look at these levels of demand, you've got a level right here, but that's not a quality level, primarily because we're basing in front of the level right here, and basing before a level is the kiss of death. And so this 15-minute level down here at 1718 by 1715, I think is probably the way to go. It's a little wick over wick area down in here. So that's the big picture. Now let's go take a look at the stock of the day. So my stock of the day on Monday took it on the chin. I was looking at Twitter. We had a great setup to the downside, and it gave us an entry and then a very quick stop out the next day. And that happens, right? Well, part of the reason for that was because I was going against the big picture trend. The big picture trend in the major markets, started to head back up. So let's find a stock that's given us that picture. And we're looking right now at Ingersoll Rand. And the reason I've got this one pulled up is because we have a little bit of of higher lows here. So we've got a little bit of this higher low picture and a little bit of these same highs. So a little bit of an ascending triangle pattern here, giving you a potential upside breakout. Now, we looked at this a while ago in one of our live trade rooms for a breakout, but also for the reversal. And the reversal has hit and moved away very nicely. I think it's a little late for that, but I do think that there's still an opportunity on a breakout trade here. Now, when I go to this thing and I go look and see where it's been, this gets me to a new high, right? A new all-time high. And so I think that's an all-time high. Let me go back a little bit further. Yep, that's a new all-time high. And so when I look at these positions that are at new all-time highs, once again, I'd much rather buy an all-time high than sell it. And a lot of people say, "Oh, that's dangerous." Well, you could have bought the all-time high here when it crested above 38, and now it's at 51. And so, if you buy the all-time high, there's plenty of room for price to continue to run. I would just take your stop below the last prior pivot. So this could be a decent one. Now, the other thing that I will say about this one, for those of you that do trade options, in looking at this, when I open this up, it has decent spread on my call options, right at the money. However, when I get a little further away from the money, we see that my spreads are not quite as attractive. So if I go to the June 72s, I've got decent spreads right between there. And so, that's would probably be the best way to play this. When I look at the implied volatility, our implied volatility is definitely on the low side. So, just going along the call, a very simple long call position might be the way to go. You certainly could do the bull call spread, but definitely I think this has merit for price to continue to rise. So that's all I have for today, everybody. I hope you guys have a phenomenal Wednesday. Until tomorrow, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.